Guess what happened? Bank of Canada raised their interest rates again today. So what does that mean going forward? Hey, it could mean another interest rate hike announcement happening in the next coming months. So we're going to talk about this and much, much more, like the month of May. What happened in Toronto Real Estate Board? All this right after these messages. Yes, my friends, Bank of Canada raised their interest rates 25 basis points, which means on about $100,000 mortgage, your interest rate, or I should say your mortgage payment went up about almost $16 per month per $100,000. That's what that means if you're on a variable rate. Now, there's lots of news and lots of Twitter feeds happening right now, and posts and everything in between. A lot of noise out there. But what we're going to look at is the real estate stats for TRREB, the month of May. So we're going to look at that. I'm going to share my screen and do the McGowan report. And as we wrap that up, I'm going to share with you what that interest rate announcement means to our local real estate market here in Toronto, the economy, perhaps what it's going to do to your rental rates and everything else. So without further ado, thank you to everyone that's been calling out and reaching out. Lots of emails and phone calls recently about real estate and people's needs and people's questions and what's going on in our market. They've been reaching out to me. There's the information right here. Feel free to reach out. Happy to always have that conversation with you and to shed some light and enlighten perhaps both of us. I don't assume that I always know the most, because I do not, but I do love talking real estate. So feel free to reach out to me. Okay. The McGowan report. Let's share my screen. So let's do that right here. And here we have this McGowan report. All of these reports are always available for download. So make sure you download them. Use it. If you're a realtor, use this to help educate your clients. If you're a consumer, a buyer, a seller, investor, use it to educate yourself, educate your partners. And of course, feel free to reach out to me. My email is on every one of these reports. Okay. So what's going on in the Toronto real estate market? Well, there's a few things that is interesting here. And if you don't want to watch the video anymore, you're going to get all your information right there. That's all you need to know, as I kind of say every month. But we're going to look at things a little bit more in detail. Number of listings for the month of May. We're going to look at the month and then year to date for every one of these slides. So this is new listings, and compared to last year, we're down 13%. But that's right on trend with what we've been looking at throughout the last couple of months here. Nothing should come at a surprise for us there. But we are seeing ever so slightly just this last week of May, maybe first week of June, just an extra little bump perhaps in new listings, which is good if you're a buyer out there. New listings year to date, where you can see we're at 67,000, but last year we were at 93,000, which that's a big difference. So down 27%. But you can see here we're starting to come back up to some of the previous years, which is okay. We do need more listings to balance out that market. Even though I said we're seeing more listings and we should see more listings over the month of June, we were still, the days of market, which we're going to look at in just a moment, that would still indicate we're in a seller's market. So let's keep that in mind. Moving down, the average asking price. So this is not the selling price. This is the average asking price. This is your listing price. You can see we're at 134, basically in line with what we were last year, a slight increase of 1%. In fact, the numbers tell us here. So this is, and I should mention, the black is 2022, the gray is 2023 this year. This is really what it boils down to, is the selling strategy between the listing agent and, of course, the seller. And this will kind of coincide with what we're going to see in just a few moments with the average selling price. We're going to see that just slightly up where we were, I believe, where we were last year. So we're sitting at a 1.34. This is across all property types in the Toronto Real Estate Board. If you have specific questions in a specific area, let me know. I can happily do the report for you for that specific area. Like if you're in Newmarket and you want those numbers, or you're in Scarborough or Durham or anywhere in Durham, Whitby, it doesn't matter. We can pull those numbers specifically for your market. So reach out to me for that. Year-to-date average asking price, we're up ever so slightly from last year at 1.31. That's year-to-date. And you can see where we've come from for the last couple of years, and that's been trending up is the average asking price. Sold properties, this is the big one. So we are at 10,000, which is an increase from last year. So yay to us, I guess. However, there's a number of more buyers than there were last year, which is crazy to think about. What we outpaced last May, and I bet you didn't see that coming. And of course, the first few months of May last year were pretty hot. The first few months of last year were really, really hot. And then we tailed off a little bit in March and ramped that back up somewhat slightly into the summer months. But we are ahead of last year, which is interesting, but not enough for our current market, as I said before. So we 10,000, which is a good number. And if you look back over the last few years, that number for, call it the summer months, back in 2021, we were hitting 13, almost 14,000 there as we kind of leaned into our April, May, June months. So we do historically see that number increase the month of May. And we'll probably see that. I'm going to say, if I remove that last line, I'm going to say if we look at this report next month, it's probably going to be about here, which is not a bad thing. If we can continue to turn 10,000 properties a month for the next couple of months, that's actually really, really good. I don't know if we're going to do that for the next few months because we tend to tail off as we get into July and certainly August. But if we can hover around that or hover around the 9,000 to 10,000, I think we're going to do okay from that perspective. Average sale price. Okay, now, so this is an important one. So we're down 4% from last year. Again, if you remember last year, we had a lot less properties sold, but perhaps the buying environment was a little bit different, like your interest rates and everything like that. So what we're seeing now has an impact on the amount of what people can obviously offer. We're still hovering at 1.17 though. That's for the month of May, which is still pretty good. Kind of in line with the last couple of years, $7,000 or $8,000 difference, and that's not too bad actually. Of course, we're way up from May 2020. 2020 is not a fair comparison at all for anything because of obviously those were the early days of COVID, definitely here in the Toronto area. Average sale price year to date, we're down 11%, and we're going to remain down throughout the next several months because if you look here, if I scroll down, if you look January and February, that was the height of the market that we hadn't seen a market like that before. It had rose. It had raised drastically for several months, and that, my friends, is really not a fair comparison as well. If we took out January and February and kind of looked at this, that's more gradual. Of course, we're down. We're down from where we were, like I said, April, May last year, but we looked to see where we had to come down from. Right, that's a big piece to the puzzle here. Okay, moving down. Units, days on market for our units, and this is 15. If you've been following along, this is less than half to where I thought it was going to be based on raising interest rates and everything like that. But we're one day ahead than we were last year. Most likely we'll see this probably hover around 16, 17 days for the month of June. And it might increase ever so slightly, but I'm going to say remain under 20 days for the summer months, July and August. We're going to remain under 20. It does take a lot to move that number. So it'll be interesting to see where that lands for the month of June. We'll probably, like I said, be about 16 or 17, for the month of June into the summer months, maybe up to 20, but that's a big swing. In a couple of months, it's got to move 5 days, which is actually pretty big. It'll be interesting to see what the interest rate announcement does today to the mindset of the buyer, as it does every time. So that'll be interesting. Days on market year to date. Well, we are at 20, but year to date for days on market doesn't have a big reflection of what's going on today, because that's what we care about, what's going on today. And of course, the previous slide shares shares that information. Very good. The average ask to sell ratio, right sitting there at 100%, 100.5%. It's gone up 1% since last year, which is, more in line with the sales strategy. And this is where we're probably going to see that level out. We might start to see, so if I go look on the Toronto Real Estate Board now, and if I pull up a specific area like Stouffville, perhaps a quarter of the properties are holding offers and the others are open up for any time. And we're probably seeing that right across the board on the outskirts of Toronto. If you get into, say, even into Vaughan and Richmond Hill, down into some parts of Peel, Mississauga, down into the Toronto area, you're probably still seeing a lot more properties hold offers, meaning have an offer date typically 5 to 7 days after the listing date and sell within that time period. As we get farther away from Toronto, we're seeing a little bit less of that. Mind you, it also has to come down with the sales strategy. So we'll keep an eye on that one over the next couple of weeks. Year to date, we're still basically at 100% where we were. And you can see we have increased since the beginning of the year. Again, that's if you list your home for $1 million, you're expecting about $1.10 million to $1,20,000 for your property. So there you have it. That's the McGowan report. And I did say to you, download this report. As I said, use it to your benefit. Use it to educate yourself. And if you wanted something more specific, like I said, if you lived in Stouffville and wanted the Stouffville report, I can certainly get that for you. Reach out to me, and I can get that community to where you are and provide that correct information. So, interest rate, 25 basis points. What does that mean? Well, as I said off the top, it means about $16 an extra per $100,000 if you're on a variable rate mortgage. Yes, is increased. I was going to say tenfold, but that's not accurate, but it has increased more than double your payment if you're on a variable rate, say 18 months ago. I feel for you. I get it. You're feeling that extra payment coming out every month, and that's a lot to ask for a lot of people. If you've been following along in my videos, we've been talking to different mortgage brokers and different broker owners across Canada about what that is doing to perhaps power sale or foreclosures. And we are seeing an increase in power sale properties in the Toronto area. However, as I mentioned last week with our video with Dion Begg, the majority of power sale properties that we're seeing are being triggered or initiated by private lenders or small mortgage investment corporations. So not your big banks. In fact, when I looked about a week and a half ago, there was only 6 or 7 sales triggered by your TDs, your BMOs, RBCs, and CIBCs. Those are your big banks. Everyone else, for the majority, were triggered by your mix and your small time lenders, your kind of your tertiary lenders, if you will. But I continue to watch that market every day because we are seeing more and more power sale listings, and you'll see power sale listings stats tripled since this time last year or over month. But we're going from 20 to 40 to 60 to 90 listings. That's the number, but that's what the media wants to spin. So just understand the numbers. There was a number the other day, 30,000 realtors have left the business in the United States since the beginning of this year. However, if you understand what that means, there's 1.5 million realtors in the United States. So just obviously apples to apples, we got to understand where the numbers are coming from. Interest rate. Let's get back to that. Interest rate announcement. What does that do? Well, for those that are on the fixed rate mortgage, that's not going to do anything, right? It might slow their process down if they're in a home that, maybe they're in a small 3-bedroom home and their family is growing and they want to get into a bigger home. Maybe they put that off for a year or two. Maybe they just kind of take a step back. Those that are on a variable rate, obviously that's going to impact them. But what we're seeing now from the banks is being able to reamortize. So if you were on a, if you had your mortgage payments down or the length of your mortgage down to say 21, 22, doesn't matter how many years, 25 years, you're able to reamortize that up to 30, 40, 50 years and keep that number, keep that monthly mortgage payment at an attainable rate. So we're seeing that by the big banks. The banks are getting creative because they want to keep your business. And if you're looking at getting a mortgage right now, we're seeing a lot of big banks pull some pretty crazy things in the fact that they really want to keep your business. They like you as a good paying customer client. So they don't want to lose that. They don't want that home to go to power of sale. So understand that. You're going to have perhaps less people or less buyers in the market. What that means is the ripple effect, the interesting ripple effect to what that does. If you're a renter out there, that's going to have some push down on you. If you're looking to go from a 1-bedroom to a 2-bedroom, or if you own a 3-bedroom unit, those units are going to come in high demand. So interest rate increase also increases your rental rates. Now, of course, if you're in a lease, you can't just see your rental rate increase. But if you're looking to move up to a larger property, or you're looking to lease a property today, expect your mortgage payment expect your lease payment to be higher today than when it was yesterday. So perhaps you're looking at a 3-bedroom home, and we're just use the number at 3,000 to keep the math easy. I wouldn't be surprised today if that goes up to 32 or 33, even 3,400, just based because of the interest rates, because those buyers that we're looking are great buyers, meaning they have a great paying job, they have cash for down payment funds, and they've just been squeezed out of that first-time home buyer market and back into the rental market. So that means the rental rates get increased as well. That's just one of those ripple effects. And they talked to us about, in that statement today from the Bank of Canada, they kind of alluded to, but didn't say, they wanted to keep the door open, if you will, to perhaps another interest rate announcement later this year. And that's all just based on the GDP and everything like that. And of course, our inflation remains higher than what was expected. So they have to increase rates. One of the crazy stats that I learned, or the crazy inflation triggers that I learned over this past year, is the fact of the matter is that when everyone has a great paying job, inflation increases, right? Because that means they have money to spend. The moment in order for inflation to come down, and we're starting to see it ever so slightly, the moment that we need to see the moment that we need is for people to start losing their jobs. We actually need a loss of jobs in order for inflation to start coming down as well. And that's just one of those economic laws of inflation, I guess, to how inflation works. So always interesting stuff. Again, if you have questions or concerns, or you had a point that you wanted to make, put it in the comments. I'm happy to respond. If you thought that I missed something or overlooked something, put it in the comments. If you wanted me to talk about something, put it in the comments. I'm happy to talk to you about that, and perhaps shed some light for myself and enlighten myself, and maybe that's something I need to be educated on as well. Again, download the report. I'm always happy to share what I learn along the way. Feel free to reach out to me over here. That's it. That's it for me for this video. Lots of videos still coming out over the next several weeks on, mortgage updates and looking at the latest trends and what's going on. One of my favorite videos that we're doing is checking in with our paralegal to see what's going on in the rental market and how to stay on top of our tenants and things like that. But for now, we'll see everybody on the next video. Goodbye for now.